paying attention to. At least in my view, in my experiences, it proves to be a better gauge to look at. So that's kind of why I use the VIX first and foremost. And we'll flip to this thing. So what I normally do, let me go ahead and delete these boxes so you'll know what I'm doing. So I put weekly and weekly levels and daily levels on this thing. And what it is just ranges. Kind of lets me know what the VIX is doing. I like to map this thing out on a 5-minute though, or at least monitor it on a 5-minute. And then I'll do my daily ranges off of a 5-minute, and then obviously I'll go up here and I'll do my weeklies, on the weekly. But ultimately, what I'll do is I'll take the high from the week prior, or the close, excuse me. Let me get zoomed in here so you can see what I'm doing. So this whole week, right, I traded from the close of last week and the open of this week. In other words, so I would have had my open line right here, right? And I would have had my close line down here, right? Because I'm using this week, right? I'm using the open of this week and I'm using the close of this week, or the last week. So today, if I'm mapping out levels for tomorrow, I'm going to use the close of this week, right? So would be 1823. So I'll go ahead and put me a line right there. So that's my close. And what I'll do is I'll wait for the open, and when the open hits, I'll put another line at the open, and that'll be my weekly range that I'm looking at. So that's the way I play the weekly ones. And then on the daily ranges, what I do is I'll go through here, get into my 5-minute chart, like Friday. I'll use this 5-minute candle. Get my drawing tool. Sorry. Okay. And I'll just embody the candle of the box. I'll get the close, Friday's or Thursday's close, and Friday's open. Got to get my opening, closing, and range. Now, we'll take. Let me go ahead and delete that. I'll show you how you get. Let me. I'll go back to the weekly. That way you can see exactly how I would have played last week, right? So you got the open up here. Actually, no, that'd be the week prior. Sorry. There's your close. Sorry. That would have been your open. Okay. There'd be your weekly range that you'd been trading off of this week. We'll scale back down into a 5-minute chart. All right. And you'll see the way this thing kind of respects and disrespects these levels. But anyhow, what I do is I look for an uptick, right? So on the weekly ranges, right? I'm just looking for the close and the open prices, right? That's all I'm looking for on those. Are we kind of coming above it and pulling away from it, or moving away from it? Or are we coming? Did we jump on the outside of it? Or are we coming back down into it? That's kind of what I'm looking for. This lower part of it, obviously, some low volatility, so you want to think about maybe aiming small and shooting small. because you're not really going to get a whole lot out of it, right? But in this low volatility area, you're not going to get much reversal type stuff. This is more of a grind type attitude in terms of the VIX goes. So you kind of find a direction and you roll with it. So that's ultimately what you're looking at right here in this. Now, when you start getting some uptick in volatility outside of this levels, right? Then you just need to start thinking about, okay, well, where's the best opportunity lie? Well, you really don't have volume to count off of when you're trading or looking at the VIX, right? To give you some insight. So what you do is you set these daily ranges, and this kind of narrows it down a little more than maybe the weekly deal, right? So you know that we jumped up real high, right? And the idea is, right, you want to make higher highs and higher lows if indeed volatility is creeping into the market. Well, we made a high, but then we made a lower high, another lower high, pretty much the same, and then we just dived right back into the weekly range, right? And we just stayed there. You know what I mean? So you would have known any position that you took, especially the short side, probably wouldn't have paid. You know what I mean? It wouldn't have played out. And it's pretty interesting how this thing will jump up and then fall back down into that closing and opening range. It kind of just bounces in between the two. And that just lets you know where you need to sit in terms of your trades go. So, if you're trading like the combine killer and you're stacking 13.75 orders out, what you need to do is think about maybe front loading some of those orders in terms of maybe like put 2 of your orders at 13.75 and maybe just leave a runner up there for like 2 and 3 type stuff. It just kind of helps you as far as aiming small and shooting small. In other words, you're not really stretching yourself out, and you really limit yourself in terms of you're getting the biggest payday for the amount of work that you do. Not knowing that this is not going to when you opened up this the NQ or the ES, either one is not just going to keep running. You know what I mean? It's going to let you know, hey, this is going to be a reversal type of day, or this is going to be a ranging type of day. It's really going to dial that down into there for you. So you're going to know ahead of time what you're going to be looking for. And I'll pair this thing up, like for a personal so if let me get this 2 screens so you can see. No, that won't work because I don't have all my drawings on that. I'll have to do it on one chart. That'd never work. But if you can see, so Friday, if y'all remember, I was really short into the open. I was thinking, all right, we are about to hammer down, right? We jumped outside of the weekly bands, right? And I said, okay, I'm going to give this thing a minute to see what it does. I was thinking, all right, we might come back up here and we might make a higher high. Well, I was waiting on that. Well, it was about right in here where I changed my mind and I flipped the script and I went back long, and I was able to recover, and I was able to keep myself from losing money by knowing that we weren't itching into new territory in terms of higher volatility goes, and most likely wouldn't be going back to the downside, more likely to go to the upside grind up or either sideways. And that's kind of what we did. Hey guys, can I get a mic check on anybody there?
Viruses was going on and off.
Can I help you?
Move. I got my hands full.
Fucking rude.
Dude, I'm about to drop this shit.
Bobby Ray, you got
My
a fucking mic open.
Dude, we need to make Magnum a mod since he does these video streams so you can mute these people.
Yeah. Who is it? I don't know.
Bobby Ray.
Bobby Ray.
Oh, shit. I'm sorry, guys. I was driving, man. My bad.
All good.
All good.
Thanks. All right. So anyhow, that was the deal, right? I was short going into the open. I assumed that we were about to make higher highs, and so I seen this, right? I seen us fall back below the opening range, and I seen that we were starting to make it resistance, and then we come back up in here, and we never really made that higher high. It just fell right back down into it, and it was right in here that I flipped the script, and I just said, this obviously ain't gonna work out, so I took mine off the table and changed my bias for the day. You know, there was no reason to be long. Seeing this jump up outside of this weekly range, right? I knew, okay, we were probably having an uptick in volatility. Well, when you see something like this and it can't get outside of it and make these higher highs, stuff tends to fall apart, and you got to be mindful of that. So that's how I use these ranges to dictate, in terms of a map goes, where I'm going to be positioning myself, and where is it that I'm willing to sit in a trade, and where I'm not willing to sit in a trade. So that's kind of the way I use that deal. And as far as the Bollinger Bands goes, there's some tricks to this Bollinger Band stuff that I use, and I
Matt,
most
before you jump to the Bollinger Band part, can you just run over the high points of that? So it'll always be the last week's close and the previous week's open for the week that you're playing, right?
yeah. So like I marked this up for the week that I'm at right now, right?
Yeah, or the one we just finished, right?
Yeah, the one we just finished. Yeah.
Gotcha. And then when you come back to do,
Sorry,
like-
I actually marked that up wrong because I deleted them. But anyhow, so yeah, this is last week, right? All right, this is the week prior. So I would use the close of this week. Sorry, I got it nailed. I put that one on the open of that week. It's actually the open of this week. Sorry. You follow me?
so for like saying we're gonna start, here in a few hours, it's gonna be for that last one that you're looking at right there. It's gonna be that close where you just stuck it.
Yep.
And
No,
then
yeah, that's the open. So what you're going to use, you're going to keep this line where it is, that
Mhm.
1718, and you can move this 1868 down here to 1823.
Right. Yeah. Okay.
Right.
And then I got you.
Yeah.
All right. And then
So
for
you're going to have, yeah,
Mhm.
you're going to have this week's close, and whatever the open is going to be your other line. So this line right here will go away.
Got you.
So I'll go ahead and well, all right. I want to make that crystal clear because that could get confusing, right? So
Mm-hmm.
if I'm drawing next week's this upcoming week's levels, I'm gonna put me a line at the close. All right, I'm gonna put a line at the close of this week. Now, whatever the open is, all right, I'm gonna put another line. Just say the open is right here, right? I'm gonna put it right there. That'll be my weekly range. That does not change. The only thing it's gonna change will be like these boxes.
Right.
Yeah.
Which would be in
Daily.
this case the last bar of Friday's 5 minute, and then the first I'm sorry, not doesn't have to be Friday. Let's say it would have been Thursday's last bar, 5 minute bar, and then Friday's
Yeah.
first
Oh.
5 minute bar. Right. Okay.
You got it.
Cool.
That's it.
Thank you.
Yeah, that's your daily and weekly ranges there. And like I said, it'll keep you, it'll just keep you in check, right? It'll keep you from getting your head too far in front of your skis, and it'll just kind of put things in reality for you. Like, if you were thinking something crazy was going to happen, well, hey, it most likely ain't going to. You know what I mean? Because you kind of were trapped in between two. You know what I'm saying? It just kind of. It kind of keeps you grounded. You know what I'm saying? It lets you know when to shoot and when not to shoot, in that
Yeah.
regard.
And it's probably pretty obvious, but that first bar is going to be like the first bar at Globex, not like the first bar of the regular trading hour, right?
That's right. Yeah.
Okay, cool.
Yeah, because I mean, that's where everything's getting priced in, right? if you just look back, I mean, it's kind of it's pretty evident of where things get priced in. You know, these big gaps. You know, it gives you some context.
Yeah.
Yeah, because I mean, if you look at 930's open, you know, that volatility gap is relative small, so you would just kind of, I mean, it held as resistance, but it don't really encapsulate the whole picture, you know, because there's a lot of stuff going on in the overnight, you know.
Hmm.
On a serious note, Magnum, how often do you ski for that reference? For you to say that reference.
I never been skiing a day in my life.
Put your head before your skis.
I've seen it happen though. It didn't turn out well for them, I can guarantee you. But anywho, that's the way I play that deal. Now if y'all guys ready to move on to some Bollinger Band stuff, I'm about to teach you a thing or two here.
Yeah, sounds great.
This is probably one of my favorite things. And there's a lot of things about Bollinger Bands, like you see, you know, you hear me talk about Bollinger Band pokes and you hear me talk about Bollinger Band this, that, and the other, but I've never showed this side of it. I don't think, but we'll move to the NQ to make it a little more interesting. So we cannot, we don't even have to look at volume, right, to know maybe what's going on. The only thing I believe I could trade just as successfully with using the VIX and using the NQ with just Bollinger Bands only in price. That's all I need to probably be pretty decent, you know. But what I'm looking for, let's find us one here. What these things do is they allow you to get in a position, right? And so if you look right here, here's a great example. What I'm trying to do is, you know, there's that whole, you know, you got to keep in mind here, I'm trying to trade around these hours of 3, 6, 9, 12, and 3, you know what I mean, Eastern times. So I'm really heavily focused and looking at these times. And so if those times don't set up, in other words, if I can't get a time to trade at 9 o'clock, often 9 o'clock will be the lead setup for the 12 o'clock execution. You know what I mean? That type of stuff is what you'll see a ton. You know, or maybe the 6 o'clock move was the 9 o'clock execution, you know, type of stuff. But what you're looking for is, so you want to see price, and it usually happens at a big move, and it can be confirmed through the VIX as well. So I don't know if it done it on a 5 minute or not, because I don't track the 5 minute very much. I'm gonna have to scroll down here to the 1 minute. Here's the deal. Let's go to 12 o'clock. All right. So we had, here was rolling into the open. We didn't see anything right there. Okay. All right. So if we know rolling into the open, right, we're obviously looking for most likely trap sellers down in here. It's what we're looking for most likely. So if you pay attention to these Bollinger Bands, right, you'll see that price will come down here and hit, and it'll run these Bollinger Bands, right? And then say we make a, let me get my trend line out of here. We make a low, and then we turn around and make a lower low. Well, by all definitions, that is a lower low, right? But if you're looking at Bollinger Bands, this is a higher low, right? Because you got to understand the way Bollinger Bands work. Bollinger Bands are supposed to capture, with this particular setting, probably somewhere in the area of probably about 85% of the price action, right? Maybe 90. I don't know the exact number, but it captures a ton of it, right? most of it. So in relative terms, right? If this was outside of the Bollinger Band and this was inside the Bollinger Band, even though we made a lower low visibly, we made a higher low via the indicator. If anybody's got a momentum indicator or any kind of indicator up on their chart, I would assure you this is showing a higher low. I ain't got nothing but volume, so I can't for sure see it. But anyhow, that's what I'm looking for. I'm looking for price to come down, roll this Bollinger Band, stick to it, pull away from it, right? And then come back and make a lower low, but without breaking the Bollinger Band, right? To me, this is a divergence, right? It's the higher low, which indicates to me something is going on. Something is about to happen. Okay, well, I can look at this last bar right before. Let me scroll in so you can see what's going on here. This last bar before that actually took the Bollinger Band, that punctured through the Bollinger Band, I'm going to take that bar, and that's going to be my pivot point. This is going to be my zone, right? So I could take this thing here and put a box and embody that candle. Just a candle. And that's going to be your zone, right? You would love to trade on the top side of that. Well, you had an opportunity right here. You had a rejection off of that zone, right? On the open. You could have traded the open, right? All because of you've seen this lower high or this higher low, excuse me. It's even though it's a lower low visibly, it's a higher low. Now, let's look what this date was. When was this? The 29th at 8:40. So that's about the 9 o'clock setup, right? The 29th at 8:40. Now let's look on the VIX. Twenty-ninth at 8:40. Now I'm just gonna put a line up. Let me go here to the 5-minute chart. I just want to show you how this correlates so well. I'm just gonna put a line right. I ain't gonna do it. I might as well do a box if I'm gonna do it. I need to do it right. That's the 29th's open. That's or the 28th's closed. This is the 29th open right there.
Travis asked if anyone's recording this.
Okay. And we were what time was it? 8:40? I think that's what it was. Let's see. Yeah, it was around 8:45. So we're looking for that 9 o'clock setup. Okay. All right, it's the same deal, right? So come on, thing. Load up here. Okay. All right. So we see this thing making higher highs, right? Okay, we see it hit the Bollinger Band and just keep running, right? Making higher highs, but yet it's not punctured the Bollinger Band. It's not pulled past it. So it's a lower high in relative terms, right? So what you'd want to do is you'd want to take you a box on the VIX. Same deal. But it wouldn't be a box. It'd probably be a line, probably be the best thing to do. And that would be your confirmation right there. So there's your line. You've got confirmation that the same thing's happening, right? You know by the opening range, right, that we fell below the opening range, right? And we've made resistance of that opening range all through here. So to confirm your long trade, what you would want to see is you would want to see that whole Bollinger Band thing, right? You want to see that price running up against it, using it as a magnet, and then coming back off of it and making a higher high visibly, but knowing in your mind it's a relative lower high. And then you want to see price break down below it and back up into it, and that's your spot, right? So 852, according to the VIX, is the perfect time to take a long. Now let's look over here on the NQ. Let's see what 852 looks like. There's 851. There's 852. That's where it's telling you to take that long. You follow me? And you would have been safe. I mean, you absolutely would have been safe. If you did not want to take the long using the VIX, you could use it as an idea. Okay, I'm going to wait for the open, and then I'm just going to get in off of something right here if you didn't like that type of structure. I ain't saying trade the open, but I'm just saying there's opportunity there. If you can withstand it, there is always opportunity at that open, and that's how you can capitalize on it. Using the VIX. Now, if you wanted to trade something else later on in the day, look for these areas of where, 9, 12, 3 type stuff, and you can find yourself some opportunity there.
What are your Bollinger Bands set to?
Yeah, 15 and 2.21.
Gotcha.
Yep.
Clear.
Do what?
Whatever happens on the VIX is inversed. In terms of the NQ, right? So if it's going up, the Nasdaq's going down.
Not 100% accurately. No. That's why you need confirmation on both, and you need that. So you need that both. You know what I'm saying? You need that box to work out on both. You see what I'm saying? You can line that up with like a Bollinger Band puncture, like right here. You're good. You're golden. I'll show another example over here. But I mean, these things act as support and resistance so much, it's ridiculous. Like, for instance, we run up against it. When we kind of pulled back, we made, in relative terms, a lower high and another lower high, even though it's higher high in visibility. So you would expect this to be this candle, the last one to poke the Bollinger Band, to be support or resistance, sometime into the future, and it works pretty good. Kind of captured most of that day. But if we're looking back to the 12 o'clock, time frames, every 3 hour kind of market rotating rule, you'll find the opportunities like this that are tremendous and they're abundant. Like for instance, right here, here's another great example where you could have took a small short. You would have knew it was a small short by looking at the VIX. This is the last candle to poke through, so you could draw your box over here. And you would know that coming into this, that this may act as support or resistance, and it acted once it broke down below it, it come back into it, retested it, and then down to the downside she went. That would be an opportunity for you. Right here would be another. I mean, you got to understand though, the VIX is telling you a different story right here. But you got to understand this is a shoot small, aim small type scenario. But if you find yourself in a day not making any money or can't find any trades without getting stopped out, well, this is how you can do that. You know, this is how you can put yourself in a good spot. So if you watch price come down here, it's running the Bollinger Band, running the Bollinger Band. All right, it pulls away. It don't give you a lower low. There's nothing there to take. Even though it punctures the Bollinger Band, I wouldn't take that one. Let's find something else here. Here might be an opportunity. Pulls away, makes a lower low. So you take the last one that broke it. Would be right there. Let's see what the VIX is saying at 1420 on the 29th. There you go. Right. You on the VIX, it's even telling you that's a pretty decent opportunity, right? So if you see we rolled down, price was rolling in a Bollinger Band, we backed up off of it, come back, made a lower low. So we find the last one that broke the Bollinger Band, and that could be a support level. Which you would have indicated that was a Bollinger Band poke right here, and then it took off. So you would know that that most likely was support. Let's see here. It's probably easier doing a 5-minute chart, to be honest with you. Looking at loading all this stuff. So we knew earnings was coming down the pipe, right? This day actually. Yeah, this was earnings, I think is what that was. So that rotation into that 3 o'clock zone, that might have been your best opportunity. Let's look what it looks like on a 5-minute chart, because you can use this stuff on several different time frames. Shit. Yeah, I mean, you could have been monitoring this thing on a 5-minute chart, and it would have give you a pretty good entry right here. Same deal. You find the last one to poke the Bollinger Band, right? We rode the band up, pulled back, made a higher high, but lower high in relative terms. You find the last one to make the high, and you put a box on it. And same deal. You find your rejection candle. Once it actually breaks down off of it and backs back into it, you could have took a short off that box. That's pretty clean. And you wouldn't have been able to take anything right there anyhow, because it never got back up there to it. It's still running, still running, still running. Everything's still moving as it should, back and forth. It's not actually making higher highs or higher lows off of the bands on the 5-minute chart. Yeah, there wasn't nothing on the 5 minute there. We'll see what we can find on the 1 minute. Kind of give a few more examples of what I'm talking about here. Here's probably one of the best examples you can find, right? So you see we made a higher, we're running the band up. We pull away from it, make a higher high. So we'd go to the last one to make the to make it through the Bollinger Band, which was right here. And we wait for it to pull off of it and back up into it. Well, it backed back up into it, and it poked the upper Bollinger Band when it did. That would have been an excellent trade, what I would consider A+, and that's about an hour past rotation time. But still, had to be an A+ setup, nonetheless. Let's see what the VIX would told us on that deal, which was Friday. Let me see what time that was. Can't remember. Around 7 o'clock. Yeah, VIX didn't really confirm. Yeah, it didn't really confirm on that deal. Look, see if it confirmed maybe on. Nope. It did not confirm. Yeah, so probably that wouldn't, you probably wouldn't have put too much size on that one, just knowing that it did not confirm on the VIX as well. But I guess you see what I'm trying to say here is like it gives you some extremely tight risk to reward ratio trades by utilizing the Bollinger Bands this way, or at least knowing you probably shouldn't get in a trade up in here. You know what I'm saying? Or if you've seen this, you wouldn't say, okay, well, there's a Bollinger Band poke. I'm going to buy it here and hope that the run up here. Well, we've seen the VIX, right? We know it was dropping. So therefore, that wouldn't have been a good trade to take. But you've potentially, being it was above that weekly zone, you could have took a short. And you would have been aware that you should have maybe could have took a short up here into that rather than maybe got long here and then stopped there. Because if you were short, you could have just stayed in your short, until it took you out at those 13.75 levels. Probably would have got a little better off. Like right here, it's still going above, still above. It pulled off right there, so you would look back to the last one that touched it. It acted as support rather than resistance. So you just keep following it, right? The last one to break it was right here. So you could draw your box right there. There's just nothing to take. Nothing to do with that. It didn't get back up in there to it enough that you could took a short off of it. That wouldn't have worked. Just another way of looking at the market. You know what I mean? Like if you don't like lower indicators or you don't want that on your chart and now you're looking at Bollinger Bands, well, where these, where these areas are that would offer you an opportunity. You'd have to be quick on. You'd have to be really quick right here, but it's right around that 12 o'clock hour. I wonder what trap sellers look like. Right there is one. That was good, right? You would have potentially been a hold of some trap sellers right here, and you had that pullback away from it. Not very big, but you had it. It made a lower high. I mean, yeah, higher low right there. So you could have used this as your potential support and resistance. And it come back in it right there at the 12 o'clock hour. So that was not a bad long from 921, 970. And there was no reason to get out. You might have got out right here because you were making a higher high. Let's look at what that looks like on the VIX. At 11:39, 11:40. Same deal. So you're running up the band, you pull back away from it, and you made a higher high, but that's a lower high. So you take your box, and the last one to poke through it, that's where you'd put your box at. And sure enough, price come down, backed right into it. Down she went. And if you were just following the VIX to kind of tell you where it should back off, probably somewhere around 1255. And yeah, 1255. That's exactly right. You could have got out right there. Very little risk on the on the table. And it's just a simple kind of a divergence type deal. Except you're looking at both. In this case, you have trap sellers at this point, right? People who sold pretty late, and then they get it run against them, and off she goes. It kind of rolls right hand in hand. If you're having a hard time looking at the volume, maybe look at some of this Bollinger Band stuff and play it in tune with the VIX, and you might find yourself in some better spots, especially in these rotation hours, right? 12 being one of the rotation hours, and that was damn near on the nose, 12 o'clock, within a couple minutes, of a complete rotation, And there again, right, it was just riding, never pulled away from it enough to give a higher high without actually hitting the band again. So there's really no reason to get out. You just, there you go. There's where your higher highs made, and you pulled back before you went through the band. So you would have gotten out right here. The VIX would have told you got out right here, actually at 55. So you would have gotten out somewhere right in here. So that's still a pretty good trade. But that's just how it works. That's how I use the Bollinger Bands. And if I, for instance, if I can identify the move, if I can identify, are we in an uptrend? Or are we in a downtrend? I will 100% buy anything that goes through that Bollinger Band and trade it the other way. So if I know we're in a downtrend, right, and price was to come up here and poke through this Bollinger Band, I'm gonna short this poke every time down to the next one, or at least down to where I can get stopped out somewhere down here. And I'm not going to limit my upside, so I'm just going to chase it with a stop until it takes me out. But that's the key, right? Because if you say, okay, well, this is an uptrend and you bought this poke, well, you got fooled, right? And you would have got fooled right into this range. Well, if you would have been paying attention to the VIX would have told you don't expect much, right? We're not really super bullish, or we're not super bearish. We're kind of just in a range. You knew that, right? By looking at this guy. And when this VIX sets up like this stuff, like what you see right here, it rode the band. So see how this thing works right here? That's a pretty good example. So we rode the band, right? All the way up, pulled back, made a higher high, nothing. So you'd go back to the last one that actually punctured the band. And if you just put a line right here, somewhere out in the future, that's going to become a resistance, right? And it did right there. I mean, it's nothing big, but still, nonetheless, it's something to be mindful of, because that could have turned into a lot more. So paying real close attention where you can't utilize the volume on the VIX, you can utilize the Bollinger Bands to kind of play the same game. You know what I mean? It's kind of the way that it's trying to be played there. So anywho, that's ultimately how I play it. If anybody's got any questions, man, we'll hop right to him. See if I can't help him out.
You look when you're looking at the VIX, you have those daily levels and your weekly levels, but do you ever concentrate any on the intraday support? There's lots of intraday support and resistance on that chart alone right there.
Yeah, I don't, to be honest with you, because I realistically gauge, like, I'm looking for the biggest move of the day, and that's the one I want to trade the most.
Mhm.
And that's it, because I want to layer into it. So I really pay a lot of attention to that, and that's why I only really try to trade, 3, 6, 9, 12, and 3. Because I want to layer into them pretty heavy if possible. And it's easier for me to maintain like a 100-point trade than it is to maintain like a 10-point, 15, 20-point trade. It's just my style, I guess. And then it's also the way I'm having to trade is it's kind of keeps me away from, the intraday support and resistance levels like that.
Yeah.
Makes it tough. It's just tough to damn scalp on a cell phone, man. I mean, it's just tough.
I imagine.
You can do it, but it's tough. You just need a lot more information than what amount of real estate I have gives me, for sure. But like this type of stuff, I mean, it works fantastic on any time frame. If you can find it, you'll find huge rotations in markets. Like I don't know, let's go to something everybody looks at, I guess, an hour. A lot of people look at an hour chart. You'll find huge rotations in the market when looking at this kind of stuff, the way that you look at it. Here you go. Here's a perfect example. You would have nailed this bottom. You knew that we was in a downtrend, obviously, for several days. So what you're looking for is that to back off and pull and make it support, right? So down here, it's pretty obvious. You look at the last one that broke it. So you draw your box. That's the last, or no, it ain't. Sorry, it's the one past it. That's the last one that broke the Bollinger Band. Stretch that thing out. You had a downtrend. It pulled away from the Bollinger Band. It made a lower low in price, but it's a higher low, relatively speaking. So you wait for price to come up and touch back into the box, and that's beautiful. I mean, that's a Bollinger Band poke and a rejection off the box. It doesn't get any prettier than that. And there you go. You're just off to the races, And you find yourself in another spot like what we was looking at earlier. you might have got yourself out right here because depending on what the VIX said, I don't know what the VIX said, but you made a higher high right there without, you know what I mean? That would have been a relative lower high. Is what that would have been. Let's see if the VIX confirmed. What date was that? The 22nd at 3 o'clock. (22nd) at 3 o'clock. No, you had no reason to get out. Actually, if anything, that was a momentum play. So yeah, you would just chase price on that deal. You know, put your stop here, put your stop, below this one. Put your stop below, somewhere up in here. And just keep running it up until it takes you out. It might have took you out right here. I mean, that's how you'd play that, right? I mean, and you see these kinds of things, and these are where these big moves come from when they're realized on both the VIX and they're realized on both the, the ES or the NQ, either or. But it works the same. You'll find big rotations in the market, when stuff like this happens. And it just happens over and over and over again.
So, for example, on Friday, if you're looking at the overnight session,
What time frame you?
1 hour.
Okay.
You got the last poke outside the Bollinger Band right here, over.
Right there.
Is it? No, the one down, over near 1800. On my chart, it's more like 2000 hours, but
And you're on an hour chart?
yes, it's a poke outside the lower deviation band actually. So go down and to your left.
Oh, sorry. Right here. Oh, you're
Yeah.
okay. You're
that guy.
okay. I got you. I was looking to the upside. You said Friday. Okay, never mind. It is Friday. All right, got you.
Yeah.
Perfect.
So would that guy be? I think he looks like a pretty good example of it, I imagine.
Yeah. There you go.
So
Yep.
where?
So we
so
go
you were-
down. We pull off of it. We made a lower high, right, or high or low. So the last one to poke it is the box, right? And that's the box right there.
So where are you taking your entry on that one? Give or
Right
take.
there.
If you're
Right.
playing that.
Right off this one, I would put a limit order right above this. So
Okay.
when this, in other words, you would want to see the rejection, right?
Mm.
This would be the rejection for me. All right. I would put a limit order right above this.
Yeah, that's a tough one to play too, because that crazy candle's right at open.
Yeah. Yeah. Yeah, that'd be a tough one to play right there. I mean, but you got to realize something. You're on an hourly chart, so you got to be relatively smaller sized, unless it was like an A+ setup.
Mm-hmm.
I would deem that one like an A rather than A+, just because you didn't get the Bollinger Band poke. You know what I mean?
Yeah.
Those typically offer you the least amount of risk, but also the most amount of reward as well. But that was a viable long, for sure, and it worked out so far. Be interesting to see how it plays out, though, considering that we run through it and then we backed off of it a little bit. Really didn't poke outside of it right there. You know what I mean? Maybe this thing rolls up. This Bollinger Band contracts some, and you get that poke through it, and then off she goes.
Mm-hmm.
That's a viable possibility too. Which would turn a B setup, or a whatever, into a A+ setup. What you're really looking for.
Yeah, it's funny to see how it opens. I feel
Yep.
like the news cycle has been a lot of doom and gloom all weekend. So
Yep. And these this happens all the time. I mean, it's nonstop. It just happens all the stinking time. And if you don't see, like, if you see that setup happen and it don't immediately react to it, keep that thing out there for a while because it will react to it at some point. It's kind of like an untested level. Here might be a pretty good example. We were running up, and then we pulled away from it and made a higher high. So you try to maybe capture this last box. You know, stretch it out and let it actually get broken and backed up into, and it'll offer you some resistance. You know, and it's just that one candle, the one that punctured through it. You know, just another way of finding support and resistance. I mean, you could deem this up as like a, you know, depending on how you traded, you could say this was a supply demand zone, right? But you would have it, you know, maybe taken out somewhere a little bit wider. You know what I mean? Still the same deal, but except you would know, okay, well, we broke through it and backed up into it and come off of it. But this way, it allows you to really sink this thing down and say, okay, this is my zone. See how much it shrunk and see how much risk is now on the table versus, you know, this much risk. You know what I mean? That's a big difference. You know what I mean? Because if you're taking your short here, you know, whereas you could have took your short up here, you know, that's 20 points.
Oh yeah.
You know, it just gives you a better opportunity to get yourself in a better spot, and you can use a little more size than what you normally could because your zones are more detailed. You know, they're more defined. Especially when you can line stuff like that up with the VIX. When you can line it up with the VIX and knowing that the VIX is the thick side of volatility. So if it's being priced into the VIX, it's the real deal. You know what I mean? Because that's a thick market, and it takes a lot of money to get that thing, you know, to where you can see it actually getting priced in. So that's obviously the why I use the VIX. You know, I really think it pulls all these other ones around, you know, by the hand, and it just makes them kind of follow step at some point, you know. But you got to keep in mind, right? You do need to monitor the ES, and you do need to monitor the NQ's relationship to each other, and make sure that they're still correlated. Because sometimes, you know, they'll disconnect a little bit, and if they do disconnect, that ain't no big deal. Just start trading the ES a little more. You know what I mean? Until they start lining back up, and then you can switch back into the NQ. You know, because this thing still behaves the same. That's the way I do it, typically. Sure is. And if y'all more got any questions here.
Well, it's another great strategy, man. I appreciate it again.
No
Showing-
problem. It's just be the add-on, right? I mean, you know, the Bollinger Bands is something I use, and I probably didn't explain the Bollinger Bands good enough, you know, of like the pokes, you know, because a lot of people. Here's a great example, right? If you miss this thinking move right here, it ain't no big deal. Don't sweat it. You know the trend is up. If you see something like this happen, you know the trend is up without a shadow of a doubt. If the VIX is supporting the idea, don't feel like you can't take that poke, you know, that poke right there, this poke right here, you know, even this poke up here. You could take it and just trade it to the upper Bollinger Band. Until that trend changes, there's no need to stop buying pokes. It'll offer you tons of plays that you normally wouldn't get. You know, if you was to see some move like that right there and say, holy smokes, we just jumped from 525 up to 800. There's no way I'm buying up here. Or just say you 744, you would say, there ain't no way I'm buying right here, because you see all this price structure to your left, right? you'd say, I don't feel comfortable buying right here. Right into this structure. Well, knowing that this Bollinger Band poke existed right here, you can feel confident in buying it because that is a very good momentum play. And I mean, you had the opportunity to make almost 200 points, 668, 786. No, it wasn't 200 points. But 120 points just on a momentum play. Super easy stuff. And it happens on a 1 minute, 5 minute, 30 minute, hour, daily. It don't matter. These Bollinger Band pokes, you just got to make sure that they're in the direction of trend. Don't do it in a sideways market. Do it only in the direction of a trend. And you can define that trend by doing just exactly what we just did right here. This was a downtrend, which that you knew, well, you didn't know that was a downtrend yet. Unless the VIX showed you it was. You could have sold that one maybe. But for the most part, just define the trend and feel confident in buying them pokes. So don't feel left out if you missed a move, because them pokes come out and they happen often. A lot more often on like a 1 minute chart, something like that. Yeah. Just veer away from this sideways stuff. And the VIX will help you do that, especially if you use them daily and weekly ranges. They'll let you know where you are in terms of volatility and whether you should be aiming big and shooting big, or you should be aiming small and shooting small. They just keep you grounded, let you know when a big move's about to happen, and get yourself in the right spot at the right time. Well, guys, if y'all are good, I'm good, man. If not, y'all raise your hand. We'll hash it out.
Yeah, thanks again, man.
No problem, brother. No problem. Well, guys, y'all have a good one. I'm gonna cut her loose.
Thanks, Magnum.
No problem, guys.